stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to this week's Zacks Top Stock Picks of the Week. I'm Tracey Ryniec, and I'm joined at the chairs this week by Kevin Cook. And we're going to be talking about big oil, or I should say big energy, really, and a hot healthcare stock that I'm not that familiar with, but Kevin's going to fill us in. So Kevin, I'm going to start with energy this time. This might be on the boring side, but energy is kind of hotter now. And my stock pick is Occidental Petroleum. The ticker is OXY. Now, I did call it big oil because I always think of Occidental as kind of one of the big oil guys because it is one of the larger E&Ps, but doesn't have the refining. So it's not technically big oil. It's got the chemicals, though, and then it's got the E&P, and that's why I like it, because it's a little more conservative play on the E&Ps than the small cap E&Ps, which are totally dependent on the price of oil. Right. But Occidental's got a few other things going for it, and it is a more conservative play here, though. So if you're looking for one of those that's going to double or something as the price of crude goes up, Occidental's probably not going to do that. It's already had kind of a good run. But the earnings are looking really, really strong here. So I brought those so you can see 389% earnings growth for this year, 2018. You can really see it, increasing there, especially with crude surging back over 70. Of course, it's come down a bit, but Goldman Sachs just reiterated its report that it expects $80 oil by the end of the year, and then even a nice gain going into 2019. So we'll see if that can hold. They never cut their dividend during the darkest hours, and it was paying up to 6% yield at one point. Now, still real healthy at 3.7. So you get the dividend, but you're going to get growth in the earnings, and just their overall story is looking real good.
That's fantastic growth this year.
Yeah,
almost 400%.
Yeah. And then the chart, again, they've started turning it around in 2017, at least in the beats. It wasn't as brutal there, and it's well off of its lows here. But if you go back into 2014, before crude collapsed, you can see there might still be further upside here. But again, you're not going to probably see the doubling like you would with the small caps. But if you're looking for a bigger E&P that's much more stable, you're going to get the dividend. It's got excellent management. Then I like Occidental here. It's got that Zacks #1 rank that I love. So Occidental is definitely one if you're looking for energy to keep on the list.
You got that stability, some vertical integration with, you said, chemicals?
Yes.
Yeah.
Yeah. So it's one of the good plays. And I know people are kind of looking out there for energy plays right now.
All right.
And then you've got the healthcare. Now, I'm not sure what it is they do. You tried to explain it to me, but I was like,
so
what?
This is CRISPR Therapeutics, which is Biotech, and big in the news last week. Now, I'm not saying that everybody should rush out and buy this stock. Okay? This is not, because this stock is not for everybody, right? It is a Zacks #1 rank, and I'm going to explain why. But there's a lot of volatility in these stocks. They're not even doing clinical human trials yet, right? To test the science, right? This is gene editing, by the way. And CRISPR, the science, stands for clustered, regularly interspaced, short palindromic repeats.
Whoa.
Fancy stuff to talk about gene editing, right? But it's amazing breakthrough science here. But they had a bit of a crisis last week, and the stocks went down. So let's...
Biotechs and their crises. Yeah. You got to have a strong stomach for this.
Yeah, they're very frequent. So on Monday there was some research release that was controversial, and this is what I wrote to my subscribers, because I have two portfolios here at Zacks where I own all the CRISPR stocks.
Okay. Wow.
Between them, yeah. So I said there's a sentiment shift in CRISPR from exciting breakthrough to dangerous science, and that's the emotional volatility.
Yeah.
Everybody thinks, we're going to do gene editing and we're going to save the world.
Right. It'll be easy.
But now all of a sudden it's going to kill us too. It's going to cause cancer. So I referenced this article. And here it is. This is from Stat. Stat is a publication where if you're interested in biotech at all, you should be reading Stat, along with Fierce Biotech and Endpoints by John Carroll. Stat, Adam Feuerstein, formerly of The Street, is now a head analyst writer for Stat. Anyway, Sharon Begley wrote this piece last Monday, June 11th, highlighting this research, and it came from 2 different places. It came from a scientific institute in Sweden, and it also came from Novartis, where they were saying, hey, something, when you're doing edits on a gene, you can cause other problems, right? You know, they used to call it off-target effects.
Okay.
In this case, it was affecting a certain gene involved with like cancer. It increased the probability that cancer could arise. So here we are, we're going to do gene editing to cure cancer, and now it's causing cancer.
Right.
So that's why CRISPR Therapeutics, CRSP, that stock itself was down probably 20% in a couple of days.
Wow.
But it's bounced big, and that's because the fears were overblown. So you can stop this video, obviously, and read, you know, my slides, which have a lot of information in them. You know, and learn more about it. But I want to advance here a little bit. I should mention, I mentioned that. Okay, good. So let's look at why is CRISPR a Zacks #1? Well, the estimates went up quite a bit in the past 60 days. You can't, I'm not showing where they used to be, but for the current year, losing $2.60. 6 weeks ago, that was losing $2.75. So estimates made a big jump up. Same thing for next year. Still losing money, which is what biotechs are supposed to do, right?
That's
heavy
right.
R&D. But look at the top line. Look at the revenues. You're talking about going from 13 million this year to 57 million in 2019, and that's a over 300% increase. And this is all about collaboration revenues. Okay. Their big partner here is Vertex Pharmaceuticals. So when you have, I call the big pharma that helps out the little biotech, I call them big brothers. Okay. And you have to have a big brother to get this kind of science done, right? Because the R&D is so capital intensive. No biotech would ever make it.
Well, I was wondering how they were paying to lose all this money every year.
Exactly.
Somehow they have to be.
Yeah, they hope there's a big breakthrough, right? So that's why you see the revenues ramp, and Vertex is there, you know, to help this science along, so to speak. I think that was the last point I wanted to make about the earnings. You know, you're not going to see earnings here for a while. It's so, you know, and the reason estimates actually are turning less, they're losing less money, is because expenses might be going down. They're hitting milestones. Oh, that's the point I wanted to make. What a big pharma does with little pharma is says, hey, you hit this milestone for this R&D in this amount of time, and we'll pay you X millions of dollars or X billions of dollars. Okay. You know, and so that's why they'll slowly see revenue increase. Okay.
So is there are they on track to, say, 3 years down the road?
Yeah, sure.
Actually have?
I mean, that's roughly,
that's the game plan
that's the way,
something.
the analysts look out like, you know, okay, there's going to be this clinical trial started in this quarter. Yeah. And there's going to be this application to the FDA for an IND, which stands for Investigational New Drug. So all these things are sort of planned out. Yeah. And you can see the pipeline. You can go on any of these companies, the biotechs, you should be able to go on their website and get a look at the pipeline, right? And you can also see company presentations. So you can see the slides that they show analysts or at conferences. Yeah. All right, so now I'm going to get into more of that, my guidelines here for investing. Again, there's a lot on this slide, but I just wanted to highlight what I told my people last week and again this weekend. First of all, I don't have a degree in molecular biology, okay?
You don't?
No, I'm not a PhD in the life sciences. But I know people who are. So here's the thing. When you're investing in biotech, there's going to be so much that's over your head, right? There's no way. I mean, even if you read, even if you had all the research and you could read it, you're not going to understand half of it, you know, unless you're a scientist in the lab doing it. So you have to kind of rely on the experts. A lot of the analysts that I read at banks are actually professionals in the life sciences themselves.
That's right.
They might be a PhD, they might be an MD, and this is what they do now. Then you can, go on the company websites, look at company presentations. The conferences are always a big deal. Like Chicago is the mecca for the big cancer conferences. We just had ASCO in June, which is the American Society of Clinical Oncology. There was a gene and cell therapy conference here back in May. And there's always something going on in Chicago regarding cancer and the latest breakthroughs. But so what I say is, if this third paragraph, I say, you know, I'll be the first to admit I don't have the technical knowledge, but I'm an investor who focuses on two things. One, knowing enough to invest at good risk-reward levels. Right. And then knowing what the other guy will pay. which is sort of my stock market training, right? Like, who's going to buy this company?
Right.
And that worked for us when Celgene bought Juno. We own Juno in Healthcare Innovators. We made 98% when Celgene just comes in and buys them, right?
Yeah.
So you don't have to understand all the science, but you have to be willing to take some risk, but not too much, right? So I already bought the CRISPR stocks at good levels.
Okay.
So we weren't even losing any money last week when the stocks went down because we were already in at such good levels. So that's kind of key is don't rush out in the euphoria and buy it.
Okay.
You know, wait till there's some bad news.
Right.
You know,
And there always is.
Yeah. And
it's just no one goes through the whole process unscathed. There's always going to be some kind of failure at one of the testing points, or something is going to go wrong.
or the FDA says, nope, we got a problem here, clinical hold.
Yeah.
You get a clinical hold, and then you're, you know, the stock can lose 50% in a day. So, you know, there's so much to know. For Healthcare Innovators, in the guide for my service, not only do I highlight like the 4 mega trends that we're following in healthcare, but I highlight the part of my process, like a 4-step process. So not only do I read the analysts, I'm looking at the company presentations and the conferences, and then I'm also looking at what institutions are buying, right? I want to know, like the Baker brothers. Have you heard of the Baker brothers?
No.
These are Julian and Felix are like these brothers who are biotech dynamos.
Oh.
Yeah, they manage Tisch family money.
Okay.
You know, Tisch, they own the New York Giants. And they've done phenomenal, right?
Okay.
But they focus on biotech, so high risk, high reward, right?
Yeah.
But one of them is a PhD in the life sciences, so these guys know their stuff. And when they buy a company, I'm like, I pay attention, right?
Yeah.
You know, you can't just follow them blindly, but.
Do you get that information off the whale site?
Yeah,
Okay.
you can find. You just go on sec.gov and put in any biotech you want, and just find the
See the big
find the.
hedge funds that are buying in there.
The Form 13, you know, to see who bought. So another person in medical circles that you want to listen to, they call the KOL. KOL stands for Key Opinion Leader.
Okay.
It's like a doctor who, like, maybe specializes in a certain type of cancer. He treats that cancer. So, of course, he's going to have an interaction with companies who might have breakthrough research to treat his patients.
Okay.
Now, and if he's also doing research or writing papers, you know, published in an academic journal, then he will have, you know, a valued opinion. So when that doctor, he or she, I should say, makes a statement about, you know, we like where this is going, you know, we like this research, whatever, that sort of puts an extra stamp of approval on these things. So, you know, there's so much to learn.
Yeah.
Again, CRISPR may not be for everybody. Gene editing is the future. It's the hottest thing in biotech right now. It's going to change the world.
Okay.
I don't know which company's going to win, because actually,
how many are there?
There's 3 main CRISPR companies, and they're all in patent disputes right now.
Oh.
It's like stuff's getting fought in court right now. So there's a ton of risk here with these companies, and you just have to be willing to do some homework. I bought Intellia, NTLA, which is a smaller one, because it was the cheapest on a market cap basis.
Okay.
You know, once it got down under $1 billion, I'm like, I think the market will pay more for these companies. That doesn't mean I know the science is going to work. It just means I think the market will pay more than $1 billion for these companies. So anytime one of them slipped under $1 billion, I was a buyer. Now CRISPR is trading almost $3 billion, so it's considered the leader. And for people who are really interested, I say you look at it on the dips, but read as much homework as you can. Those 3 websites, Stat, Fierce Biotech, and Endpoints, all have great data.
I also use the insider buying on some of these stocks.
Yeah, oh, absolutely.
I've bought some for my insider trader over the years. Sometimes you're just too early. Like the insiders do get in a year, maybe even 2 years before they think it's going to come to fruition. So I don't really have that type of hold period in the insider trader, but it does give you some signals, especially when you see like members of the board.
Well, you just gave me a hot one last week, a company I own, Nectar, because that guy, he's big in biotech. So for him to go and say, oh, you know,
I'm going to add.
I'm going to add here.
More. And they all get, if it's a director especially, they're all getting awards as compensation usually. So they already own a lot of shares, but they're buying more. That's kind of saying something,
Lot
because
of
the insiders
confidence.
get greedy too.
Yeah.
So, all right. So, what does the chart look like on CRISPR's?
Oh, the chart
I mean, it just sold off, you said, but
Bounced right back. I
Okay.
told my people, I said, if you don't have a position here, I said, you need to buy something here,
Okay.
And I said, if you're adding, we wanted to add under 55. We got a one-day dip
Wow.
under 55 last week, and that was it. Now it's trading 62 this morning.
okay.
So
All right. So
Gotta be quick.
This was a good tutorial on how to buy biotechs.
Yeah.
Crazy
or how to stay away from them if you can't
Well,
handle the
yeah.
emotional volatility, right?
Right. Either
Like,
way.
do enough homework to feel comfortable, but there is always going to be big volatility.
Yeah. Okay. All right. So those are our 2 picks for this week. Energy, which sounds kind of boring now that we talked about the gene editing over here, and gene editing stocks. So be sure to tune in every week, because we bring you the top stock picks of the week every week here at Zacks, and you never know what you're going to get. So we'll see you again next time.